Okay, so you sent us a really interesting collection of thoughts and articles. It's clear you've been digging into this whole issue of real estate affordability in India.
Hmm.
We've got notes here touching on, income levels, different investment ideas, how the property market actually
Yes,
works.
it's a complex picture.
It really is. And our mission, I guess, with this deep dive is to try and cut through some of that noise,
Yeah.
to the core of why things feel so unaffordable for many and what that actually means for people listening.
Right. Moving beyond just the scary headlines.
Exactly. Because you see those stories, maybe about Mumbai property just going through the roof. And you have to wonder, is that the whole story? Is that what affordability looks like across all of India? Or is there something deeper going on?
That's a great starting point. And I think the first thing that jumps out from the material you shared is how easily averages can mislead us.
Oh,
Well, think about it. If you compare those super high-end luxury places in big cities, the apartments with amazing views in Mumbai with the kind of housing the average middle-class family is actually looking for.
okay. You get a skewed picture.
Totally skewed. It's like judging average car prices by including Formula One cars or something. It doesn't make sense for most people's reality.
Right. And your sources seem pretty clear that those, ultra luxury properties, they've always been out of reach for most people
Yep.
historically.
Precisely. So when you see a crazy number, like what was it, 2.5 lakh rupees per square foot.
Yeah, something like that. Eye-watering.
Exactly. That's an extreme. It's not the benchmark for the general market most people are actually in.
And that distortion, I suppose, could make people feel unnecessarily anxious or maybe even make bad financial choices based on those extremes.
It absolutely could. Which brings us, I think, to a more fundamental issue highlighted in your notes, the gap. The growing gap between what people earn and what a home actually costs.
Ah, yes. This disconnect. It's not just about house prices rising, is it?
No, not entirely. The material really stresses that stagnant wages are a huge part of this equation. Incomes just haven't kept up for a lot of people.
Yeah. And the sources mention the struggle,
Yeah.
people feeling underpaid, maybe overworked, and the dream of owning a home just feels further and further away.
It raises that key question, doesn't it? Are prices genuinely too high, or are incomes just too low? Or maybe it's a bit of both.
Yeah, and the material doesn't really give a simple yes or no to that, does it?
Wisely, no. But the undeniable point, like you said, is the affordability gap. It exists, and it's widening.
Okay. And that gap really hits home when you start thinking about paying for it, right? The whole EMI thing.
Exactly, which leads us to the EMI to income ratio discussion.
Right, the 40% rule.
Yeah.
The idea that your monthly home loan payment shouldn't be more than, say, 40% of your household income sounds sensible on the face of it.
It is sensible financial advice in principle. You don't want to overstretch yourself. You need money left for, well, life. But as your articles point out, actually applying that rule in many big cities, it's really, really tough.
Because rent is already so high.
Precisely.
Right.
If you're already spending, I don't know, 30% or even more of your income just on rent in a metro city,
Yeah.
then sticking to a 40% limit for an EMI becomes almost impossible unless you have a massive down payment saved up, which, back to the income point, is also hard to accumulate.
So it forces a tough choice, doesn't it? Either break that sensible 40% rule, stretch your finances thin, or look for housing way out, maybe far from work or amenities.
That's the reality for many. It really puts that 40% guideline into perspective against the cost of living in major urban hubs.
Okay, so if buying seems that challenging, it kind of leads into the next point in your notes, people looking at other options, like investments.
Right. And there was that period you mentioned the sources cover it, maybe 2016 to 2019, where there was a lot of talk from financial influencers pushing stock market investment.
I remember that. The narrative was almost like real estate is slow, put your money in stocks for better returns.
Yeah, the idea was, maybe aim for those 25% annual returns in the market, pay relatively low rent, and you'll come out ahead. That was the pitch.
Seemed attractive, especially when property wasn't booming as much then.
But then came the reality check, didn't it? Especially with COVID hitting the market.
Right. A lot of people who jumped in with those high expectations, they lost money.
Significant amounts in some cases. And then if you swing back to look at real estate as an investment, specifically rental yields, the data you shared shows a really wide range.
Yeah, I noticed that. Some reports say 3%, others suggest maybe 10, 12%. That's a big difference.
It is. And that rental yield, basically the rent you get each year as a percentage of the property's value, it can vary wildly based on Location, property type, market conditions. It's not always as predictable as it sounds.
So weighing those options,
Mm-hmm.
stocks versus property, is not straightforward.
Yeah.
Both have risks, and the returns aren't always clear-cut.
Exactly. And speaking of factors affecting the property market, the black money issue often comes up.
Ah, yes. Does it drive up prices across the board?
Well, your sources offer a helpful clarification. It seems to have an impact, yes, but maybe more in specific segments, like projects that face big delays.
Okay, so not everywhere.
Apparently not. The material suggests that, reputable builders, especially in the main Tier 1 and Tier 2 cities, they tend to stick to transparent dealings. They're catering to buyers using declared income, white money.
So options exist for people playing by the rules using legitimate funds.
That seems to be the message. So while black money, undeclared cash used in transactions, often to avoid taxes is a factor, maybe in dodgier parts of the market, it's not the single reason everything is expensive, particularly in established areas.
That's good to clarify. Another thing, often blamed for high prices, especially in crowded cities, is FSI, the floor space index.
Right. The argument being that if you restrict how much you can build on a plot of land, low FSI, you limit supply and boom, prices go up. Seems logical.
Makes sense on the surface.
But the sources you shared bring up Hyderabad as a counterexample.
How so?
Well, apparently Hyderabad doesn't have FSI restrictions, or very few. But they still face affordability issues and sometimes even have too much unsold property and inventory overhang.
Huh. So just allowing unlimited building doesn't automatically fix affordability.
It seems not. It challenges that simple FSI causes high prices idea. Plus, the sources mention that building really high, say over 40 floors, actually gets more expensive technologically.
So even without FSI limits, super tall buildings might not be cheaper overall.
Could be. It suggests the picture is, again, more complex than just one regulation being the villain.
So bringing it all together, what's the bigger picture on unaffordability then?
I think the material you compiled really boils it down to two main things: that basic mismatch between housing supply and demand, and crucially, the income stagnation problem we talked about.
It's not just speculation or rules, though they play a part.
Exactly. It's those core economic forces.
Yeah.
And it's also a good reminder from your sources not to just swing wildly between investments, right?
Right.
Not to think the stock market is the only answer and real estate is always bad, or vice versa.
Yeah, both have their place, their risks, their potential benefits. Need a balanced view.
A balanced, holistic understanding is key. It's a mix of factors, not one simple answer.
Okay. So for someone listening, feeling maybe a bit overwhelmed by all this, what's the practical takeaway? What should they do?
Well, the sources offer some quite pragmatic advice, actually. It's less about waiting forever for that absolute perfect dream home that might always be just out of reach.
And more about
It's more about focusing on what you can realistically afford now within your budget, and importantly, doing that in cities that are reasonably well managed, with decent governance and infrastructure.
right, prioritizing actual needs, location for work, schools, maybe transport and solid financial planning, rather than chasing some luxury ideal or a high-risk investment gamble.
That seems to be the smarter, more grounded strategy proposed. It feels more actionable.
So if someone's trying to figure out which cities are well-governed or what within budget really means for them, how would they even start?
That's a good practical point. For cities, maybe looking at independent rankings or reports on governance, infrastructure projects, ease of living indexes, that could give some clues.
Okay.
And for budgeting, it's about being brutally honest, looking beyond just the sticker price of the house, factoring in all the costs, registration fees, stamp duty, maintenance, maybe repairs.
And making absolutely sure that EMI fits comfortably, long-term, without pushing past that sensible threshold we discussed.
Exactly, doing the detailed math up front.
Okay, so wrapping up this deep dive then,
Yeah.
we've covered quite a bit how those averages can trick us because of the luxury market.
The big income versus cost gap, putting pressure on people.
The reality check on that 40% EMI rule in big cities.
Yep, the whole stocks versus real estate investment debate, the nuances there.
And clarifying the role of black money present, but maybe not universal, and debunking the idea that FSI is the only problem.
Right. I think the core message from the sources is that unaffordability isn't simple. It's driven by those big supply-demand forces, but heavily influenced by incomes just not keeping pace.
So maybe the final thought for listeners is, considering all these different pieces, the income, the market realities, the investment noise, the regulations, what assumptions that you perhaps held about buying property in India might need a second look now.
Yeah, it really encourages you to think more deeply about how your personal situation, your income, your goals, where you live interacts with these bigger market trends, doesn't it? Food for thought.